Hello and welcome back to the PJ Trade Review series, where I go over trades I take with my premium members and I give you guys the sauce over here on the YouTube channel. Today we are going to talk about front running gaps. What is a front run of a gap? I'm going to put up a little presentation here on the screen of what front running a gap really looks like. If you've ever taken an inversion fair value gap before, you have noticed that when an inversion happens, there seems to be speed through the gap to the downside. A lot of the times what happens is with that candle closure, it's going to ruin your risk to reward. Over the years of my trading and in my trading experience, I have developed not a skill set, but a way of reading volume when the market is giving me that signal, allowing me to then front run a gap, okay, when it's appropriate. Now, what I'm going to show you here today is something that I don't recommend for beginner traders. I'd rather see you guys taking the inversion on the candle closure and then just adjusting your sizing accordingly. I'm going to show you how I have taken today's inversion fair value gap with a front run, okay? But certain factors that were met that gave me the confirmation to take this trade. Guys, all I ask in return for all this free education and information is just give me a like, comment, and subscribe to the channel if you have not already. We are approaching 20,000 members on this YouTube channel. Let's get into today's trade review. All right, so as you can see on the chart, here is the trade review. It's a little confusing at the moment because this is from earlier when we went stops to break even, but I will draw out exactly how we took the trade and exactly the idea behind the trade. If we're looking at this on the 15-minute time frame, first off, we need to understand a couple key principles. Okay, now stay with me here because this is very, very important. And honestly, it should start to click once you see it. On the 15-minute time frame, we are really stuck in a consolidation. This is really a range consolidation. Okay, now this is the week of FOMC. That is when the Federal Reserve comes in and they announce if they are going to cut rates or not. Then they have a press conference after that, and there's a lot of volatility in the market. So in this current price action, you are seeing a consolidation pattern leading up to FOMC. Okay, now what's important here is if you're looking at this, we're looking at our current session here. Let's just look at like this price action right here. Draw your attention to this zone. As you can see, the New York AM low is resting down here. Okay. The market has come just a couple ticks within that New York AM low. It's actually just about 3 points within that New York AM low. Okay. Whenever the market for an extended period of time is teasing a major liquidity pool like New York AM low in this example, the longer that it's holding here, let's just look at another time frame here. The longer that it's holding very close to this draw on liquidity, the higher probability that that liquidity pool is going to get tagged. Test this in your own trading. Watch this in your own trading. You will start to notice how this stuff and how I'm coming up with this stuff in the first place. The market, when consolidating close to a major draw on liquidity, will draw towards that draw on liquidity very soon. It's a higher probability that it will happen. You have to understand that key part there, because if you don't understand that part, you won't have any idea of why I took this trade in the first place. Okay. New York AM low is unmitigated, which means there has not been a candle closure below this New York AM low yet. Now, in simplistic form, for newbies here on the channel, that means that that draw on liquidity is open. Okay. I can take a trade or look for a trade model into this liquidity pool here at the very minimum, because it's an open draw on liquidity, which means the market has not gone there and taken those resting orders that were sitting here all the way back on December 9th. Okay. That is very, very, very important that you guys understand this key factor here. Now, putting this together and understanding, well, okay, I get it, PJ. There's an open draw on liquidity. The market's kind of choppy, right? how do we get involved in this type of trading setup? Well, the first thing that I do want to draw your attention to is what we saw this morning. Let's just bring price back again right into here. Okay, right into here. Look what this market does. Now, for opening range breakout traders, which I highly do not recommend trading like, they get stopped out right here. Okay, opening range breakout trader. This is an opening range breakout to the downside. They're now trying to take shorts here. Maybe they made some money, but the market quickly humbles them and they get stopped out. What I am drawn to here now in this session is this BPR gap right here. Okay. BPR gap. What does it stand for? Leave me a comment. It's very, very simple. I'll say it. It is a balanced price range. It's when two fair value gaps overlap each other, creating a balanced price range, which is a strong support and or resistance level. Okay. Just think of this as a key zone. Like we are drawn to this zone now. My eyes are looking at it. Okay. It's the key level of the session. Very important. Now, this market is going to go ahead and chop for the first hour plus of this day. And we're sitting here watching this. Now, here's another great example. As we're going through this trade review, there's just so much stuff to talk about because there's so many great examples. Here's another great example. And I talked about this in the live stream today. Okay. Look at this candle right here. And if you're looking at this, on this session and you're looking for an inverse of this bullish gap here, which I know a lot of you probably did. Okay. Of this bullish gap right here, right? Which is also the BPR gap. A lot of people are looking to short this right here. I have a very, very popular saying in the Discord. It is no inverse, no trade. This candle has not inversed this gap yet. And if you are taking a short here, you are playing a high risk game. Okay. This comes all together on the reason why I took a front run short later in this video. It's all going to tie together because you got to understand this. This market fails on this move right here to go inverse of this strong zone. Okay. And it snaps back up and manipulates higher again. Remember what I said earlier. The more that we hang out in a zone, the higher likelihood of that zone getting disrespected. So now let's continue on. We're now at 10:10 in the morning and we're just doing nothing. We're just doing nothing, doing nothing, still doing nothing. And then all of a sudden at 10:34, we actually go inverse this gap. There's the actual candle closure. Okay. We have now just confirmed something on the session. Bears just flipped the key area, right? They just flipped the key area. And at the same time, did you notice what happened here? They didn't take the New York AM low. The light bulb should start be going off for some of you guys. They inversed the 1 minute BPR down here, okay? And they left the New York AM low. That's quite interesting. Let's see what happens here. Now, in my experience, when they do not take a low like this, they usually like to snap it up higher one more time, grab liquidity, all right? Then send it towards that New York AM low. Because listen, realistically, everything in this zone right now, okay, everything in this zone is looking lower. I can look at basic structure and tell you right now that we just put in a new lower low, okay? It's very minimal. It's very minimal new lower low. But we're not putting in any new higher highs anywhere here. Like we're not displacing above any new higher highs. Okay. So for me, price action is looking bearish. I've got an open draw on liquidity at the New York AM low. I'm still seeking that draw on liquidity. I'm not losing sight that that New York AM low is still sitting there. Okay. So this market, well, I know that this market likely now wants to manipulate. Like a lot of people are like, the market makers know, guy. They know where liquidity, they know where liquidity is. I mean, that's literally their job. They're making the market. You got to start to think like a market maker for a second. They know that a lot of people are looking for this area. So they're going to snap it up one more time before they then bring it down into this area, right? That's how you have to start thinking. Here's where things get interesting for me. They bring it back up one more time. They're tagging a bunch of fair value gaps here. Here is a 5-minute bearish order block resting right here. Okay. Now, looking at this, you're probably thinking to yourself, wait a second, isn't this a 5-minute inverse to the upside now? And you are correct, my friend. You are correct. What is the issue with this? What is the issue with this 5-minute going inverse here, though? My BS radar is starting to go off. Why is my BS radar going off here? Because the New York AM low is still sitting there. There's liquidity resting here. If the market wants to reverse from this low without sweeping liquidity, see you later, brother. I will not be taking the trade. Good luck. But I know in my experience that this is just a setup to go lower, right? Now, here's the part that just becomes, you know, this is where the tricky part. This is where we take a front run, okay? Remember, what did we do to the left here? What did we do to the left? We went inverse. We made a new lower low, okay? We're coming back up here to make a lower high now, right? We're coming back up to make another lower high. Now, if I am looking at the trend here, I am now looking for this market to make another lower low into the draw on liquidity, which is New York AM low, okay? And all I have to do now is wait right here, okay? Right here. I'm marking out this FVG right here, okay? Just like so, right? I see the speed with the V shape right from that order block zone. That is a V shape recovery. The bearish candles are closing very heavy. There's not much wick in here. This is a very strong order coming through. And then another one. Okay. Now in real time, I can't do this on replay bar. It's impossible. In real time, while I'm watching this, I'm also watching the DOM on Trade of 8. The DOM is flying. Like there's orders coming in all over the place. Gaines is seeing this on the bookmap orders too. He could see it. The orders are coming in lower now, pacing fast to the downside, right? This is price action trading, y'all. This is price action trading. I take a front run short right here before this candle closes. Right here, we run the stops above, okay? And we target that New York AM low as a first draw on liquidity, okay? And an extended draw down into the New York PM low down here, okay? Now, a couple ways you could run the stop here. You could run it above the 1-minute flip, or you could run it above the swing, right? Up to you as a trader. In my opinion, the safe stop here is going to be above the swing. The little bit riskier of the stop, the cheaper stop is going to be right above the inverse, okay? Up to the trader. Now, again, we're in this trade right here, and this thing moves instantly to profit. Now, the first level I'm looking to scale and go break even is right here. Okay. That comes really fast. Boom. We're break even now. Run stops to break even. Okay. Scaling off here, because why are we scaling off here now? This happens fast. Why are we scaling off here? We just took New York AM low, right? We just took New York AM low. Now let's quickly hop on the ES real quick. Okay. Let's quickly hop on the ES. ES is putting in a kind of an interesting bullish SMT right here. Okay. So this is an area that I'm looking to scale out of. Now I'm looking to scale out right here. Because we could catch, market makers can catch a reversal, a bullish reversal off this zone pretty fast. So we go stops to break even. We take some scale out here. And then we get more. We get more off the leg. We get an extra, let's see, from that scale out zone, we get an extra like 30 off of it. More scales come out. I'm now holding 20% of my position here, right? And then unfortunately, the rest gets stopped at break even, right? Beautiful trade. I got 80% out of my position. I left runners for that New York PM low, okay? The market catches a V-shaped recovery and then goes higher from here. This is it, guys. This is price action trading. This is also a very great example of paying the trader, man. Paying the trader. I would be absolutely miserable if my trade went 60 plus points in profit and I was not paying myself on the way down. This is why I preach taking partials at key levels, especially major swing highs and lows. I'm scaling out here. I'm scaling more down into here. And I believe I scaled more here is because ES did something funky again. What was it? I think it was just another SMT. Yeah, it was just another SMT. It was another bullish SMT that happened down into here. And I'm like, you know what? I'm not playing games with this anymore. I'll take some more off. I left 20%, get stopped at break even. But man, key to take partials, guys. So key. If a trade is break even, right, it is your job then as a trader to make a decision on when to take partials off. That's why I recommend people trade micros. Run 5 micros, right? At this zone, you take 2 off. At this zone, you take another 2 off. You got 1 runner, left to full TP. And if you catch that full leg, beautiful. If not, you're only the last 10% gets stopped at break even. But at least you paid yourself on the way down. That's today's trade review, guys. There's a lot of stuff to go over in these videos, a lot of little hidden gems. So make sure you're rewatching this stuff. You're not going to get it in one 18-minute video clip. But I hope you guys are improving as day traders every single day. And make sure you're journaling, man. Taking screenshots of why you're doing what you're doing. Writing some notes down on the side so you can understand why you're losing, why you're winning. It's very important to your trading success. Have a great and blessed day. I'll see you guys in the next trade review.